What's going on, ladies and gentlemen? Sal here, back again with another video. Ladies and gentlemen, we are leaving the silent period and going into the most important time of the year, which is the earnings season. Now, it's so interesting that in this silent period, if you don't know what that is, that's basically the 4 weeks prior to earnings that companies cannot say anything material about what is going on with their business. That in that time, we've gone from a bear market back to quote unquote a bull market and had the biggest jump since 1938 in regards to percentage increase in the markets and on points as well. So going into this earnings season, I think it's going to be incredibly devastating for the market. Obviously, if it doesn't happen, fine, we'll switch left and take and use other products. But I think we could possibly see a very quick move to the downside, which is going to generate the kind of returns on those inverse ETFs that we saw as the coronavirus really started to take hold here in the United States of America. So, I missed out on that opportunity. I know many of you missed out on the opportunity that leveraged ETFs offered in regards to that move lower at the beginning of March. You could have doubled your money. All right. You could have doubled your money if you were in some of these leveraged ETFs products. Now, I don't want to miss out on a second attempt at this. So I want to make this video today to kind of help you, really find a signal about when and where to kind of jump in if this does happen, if we do get just an avalanche of bad earnings reports, bad guidance, and we lose basically all of these gains that we've been able to generate in the market. All right, so let's go ahead and plot that on the chart. So we're gonna use a momentum oscillator here, because when we're talking about leveraged ETFs, you cannot use your standard RSI. These are products that are incredibly volatile, and I think the best indicators are oscillators, momentum oscillators, and the best one, in my opinion, has to be the Chande momentum oscillator. And I'm going to show you how to set up this indicator, and I think it's going to prove to you through just some simple, back testing in terms of just, looking, seeing yourself why this is going to really work. Now we're going to change the length to 20, right? We're going to thicken it out a little bit. All right. We're going to press OK here. And the Chande momentum oscillator works by having a 100 to negative 100 range. The oversold is negative 50. The overbought is positive 50. So anything above positive 50 is considered overbought. Anything is oversold is negative 50 or above. Now we need another confirmation indicator on the Chande, because I just think by itself it's incredibly powerful, but we just need another level of confirmation, and that's why I'm going to use a moving average. So let's go ahead and add a moving average. Oh, I'm clicking it too fast here. 1 second, guys. All right, so we're going to use a moving average. All right, and we're going to use the same one they give us. We'll stick to the 9. All right. We'll make it red to see it better. All right. Thicken it out as well. Okay. And then we'll move it down to the existing pane below. And of course, we can't just slap it down there, right? We have to source the moving average to the indicator we want it to be joined to, right? So we'll take the spinning wheel again. We'll click inputs, and then we'll source it to the Chande momentum oscillator. So now it's taking that 9 and reading the information from the Chande. All right. So that's why a lot of guys get messed up, because they just slap the moving average down there and it doesn't work like that. So that's why when you're moving around, you'll notice is that you're not getting the same readings when you don't source that second indicator. All right. So here we are right now. And of course, as you can see here, we've gotten basically the key to get out of SQQ. Basically, not necessarily at the top, but we had gotten the Q there basically on the 17th of March. We know the market did go a little bit lower, but it was clear that the momentum started to fade. And here we are now at negative 31. And because, again, we have came off the lows in QQQ. Now, here's the thing. When you are changing the time frame, like any indicator, it has a big difference in terms of what signal you get. So be very careful what time frame you're in, because again, this is a leverage product. So if you're trading in a specific time frame, you're going to have to make your responses effective to that time frame, right? That trading style of yours has to be effective to that time frame. Now, when we look at SQQ, interesting, last week already towards the weekend, we got a buy signal, right? We got this momentum showing coming off those, heavily sold lows, right? Got as low as 66 on this hourly time frame, eventually coming off and giving us a buy signal. So this momentum oscillator is basically now giving us a buy signal going into Good Friday. We'll see if we follow up on that going into the earnings cycle. But a lot of people had said that this earnings season is going to be a very, very dangerous one. And again, I'm putting this video out there just to kind of get you mentally prepared for that. All right, so now let's go back to the daily chart. And as you can see here, the signal's not on here yet, right? It has not confirmed on here yet. Let's go ahead and put my 10 moving average on the actual product, SQQ being the leverage product we're looking for. All right, now let's go back and see how it worked in the past. All right, how it worked in the past. And as you can see here, if we went to go back to the beginning of basically all of this trouble, we would have got, here's the two closes above the 10 moving average, which I like to look for on my signal. We would have got in there, right? And we didn't get two consecutive closes beneath the 10 moving average on the daily until really, that 24th, which was the second day, which was the day after the low, all right, which was the day after the low. But obviously, if you were smart, these candlesticks were telling you, more than, one time that it looked like some bottoms had been reached here, and it was probably time to take some profits. Just based on these candlesticks alone, you're seeing a lot of resistance to continued selling. All right. So this clearly would have been areas for you to take profits, but the entry worked. Your entry clearly worked. You didn't get a single, second day close, right? Because you need two closes to really get out. But the candlesticks told you needed to get out. The candlesticks told you needed to get out in this situation. But ladies and gentlemen, there it is. If you don't like SQQQ, you can also do TECS, which is basically the same. I think SQQ is a lot more liquid. All right, I like SQQ better because the liquidity is a lot better there. You're not necessarily buying options in this. I think SQQ may have. I don't know. I wouldn't buy options in a leveraged ETF product anyway. So you go straight stock because you don't need margin, right? If you got a cash account, you can trade these. You can trade these on a smaller time frame. I just feel like the bigger bucks are more warranted if you were to swing trade these, and that's what I'm making this video, because I think we've got an excellent swing trading opportunity coming out of this quiet period, silent period, whatever you want to call it, going into earnings, which could end up being very, very ugly. We're going to watch it. Stay tuned. I'll be here making more videos. Until next time, take care. Trade well.